The Obama administration is lifting the veil on a plan to buy billions of dollars of banks' toxic assets. There are tons of soured loans, and in turn make it easier for banks to start lending again.
It's generally complex securities that are simply so complicated that nobody really knows what they're worth.
The government's calling it the Public-Private Investment Program. The idea is to buy up to $1 trillion in troubled bank assets. The Treasury Department would invest $75 to $100 billion from the $700 billion in bailout money that Congress originally appropriated. The rest would come from the Federal Reserve and the Federal Deposit Insurance Corporation, and most importantly, private investors.
One of the reasons you want to have the partnership is precisely so that the government doesn't massively overpay for these troubled assets that are on the balance sheets, and B, so that everybody's got skin in the game and you don't get into situations where you're paying guys for failure.
What's failing banks is now up for sale, such as mortgages now worth more than the homes themselves, and pools of mortgage-backed securities. The government wants investors to share the risks and rewards.
The problem is, when you're talking about toxic assets, you don't know what the price is, and you don't know what the risk is.
But the administration believes that if it succeeds in attracting private investors, the market will begin to set realistic prices.
This plan assumes that private capital can be enticed in. If it can't, they've got to go back to the drawing board and rethink the plan in its entirety.
Obama administration officials caution this plan is not a silver bullet, but an icebreaker to unfreeze credit markets so American families and businesses can borrow again, a key to economic recovery. Russ?
Bianca Solorzano, thank you very much.